and welcome. You have tuned into Market Fatafat on ET now. I'm Shristi Sharma and with me is Vinny Motiwala. And viewers, this is a show where in the next 1 hour we're going to be highlighting all the buzzers in trade right now. But before that, let's have a quick look at what the markets are up to. So Vinny, almost at the day's lowest point when it comes to Nifty Bank, but the breadth of the market is also now skewed towards the favor of the declines, but indeed a lot of stock specific action, and your sector is one of the top gainers as well.
Absolutely. Today, after those 4th June levels that we saw when it started buzzing after that, again FMCG today seems to be trending because obviously a lot of Q1 updates. We'll take you all through all of that. But obviously top sectoral gainer, Nifty FMCG 1.3% uptick there. When you're looking at the Nifty, quite a range bound session, a very narrow range is what it's roaming in today. Look at it. Not much of an excitement there, right? 24,300. About the 320 mark, then came down 24,280 levels is what it's managing to move on around that level as of now. But let's move on and also look at what is happening in terms of the banking side, PSU bank side. Nothing exciting from the PSU banks. But when you look at it specifically, railway stocks today, they are buzzing in trade. So whether you look at an RVNL, Ircon and International, all of them are managing to hold on to very strong gains. RVNL up 14%, Ircon International also buzzing in trade. Let's pull up Ircon International. That also is managing to hold on to gains, and a lot of other movers, REC, PFC, that we are keeping an eye out on. But Shrishti, that's how the market is looking like in terms of obviously benchmark indices down 0.1%, but broader markets also a bit subdued in trade. So a Monday blue, rainy season, everyone's just chill. Maybe that's what we're keeping an eye out on.
Well, yes, certainly that's the Monday blues maybe coming in for the markets, but towards the decline, but a lot of stock specific action, and that's what we're going to highlight in the upcoming 1 hour. But before that, let me welcome our technical expert for today, and we are being joined by Aditya Agarwala. On the technical side, he will be sharing some of the stocks that are looking interesting to him right now. And on the research side, we are being joined by Jinay. A very good afternoon to both of you, and let me start highlighting the first counter that is in focus today, and that's indeed Paytm, because this stock actually surprised all of us. Look at the gains of almost 9%. So finally making the shareholders of Paytm happy, and that's on the back of the block deal, because just today we saw that the shares of Paytm did rise as much as 8%, and that's the highest level since early February. And from the block deal front, that's around 2.7 lakh shares of Paytm that did change hand in 2 block deals back to back in a range of 461.3 to 470 rupees a piece. And indeed, after those block deal as well, the stock is trading above those levels and holding on to the gains in quite a subdued market for today.
Okay. That is Paytm for you all, but another stock that's buzzing in trade, and from the FMCG side, we do have Marico that's holding on to very strong gains. This came in after its Q1 update, surely an interesting one, in line with what the street was expecting. Consolidated revenue in high single digits. The domestic growth, when you're looking at it, the domestic business also managed to see a modest growth. Underlying volume growth will be seen on a consolidated basis. Parachute, a low single digit volume growth. Value added hair oil, that's where the concern comes in, is because it's a muted growth this time around. Saffola, mid-single-digit volume growth is there, is what the company is expecting there. Gross margins are expanding. Operating margins are expected to see a slight bit of an expansion. Raw material costs have been quite benign even this time. So yes, not much of a concern on that front. And overall, what brokerages are also highlighting, Morgan Stanley maintaining the equal rate rating, maintaining the target price as well. They said Q1 performance was in line. Demand trends continue to improve gradually. So they don't see much of an issue there. And similarly, JP Morgan also maintaining the overweight trading, and 660 rupees is the target price that they continue to maintain. They expect value-added hair oil that will start turning positive from Q2. Q1, yes, we have seen that muted growth, but Q2 onwards, positive outlook there. So yes, keeping an eye out on Marico.
All right, that's about Marico, but moving on to the next counter that is in focus. And let's talk about ALYM then. And Aditya, that's the first stock that you wish to highlight. Tell us, how is the technical setup looking like for this pharma major?
Good afternoon, Srishti. Good afternoon, Vinny. Thanks for the show. Pharma is making a comeback, Srishti, and it looks like there are a lot of pharma stocks which are buzzing in trade. Last week as well, a bunch of pharma stocks were looking good. Talking specifically about ALYM, laboratory stock has broken out from a downward sloping channel on healthy volumes. So it looks like there is much more room on the upside. 51.30 was the resistance. from there, stock has broken out on decent volumes, I would say. On the upside, I think stock can easily test levels of 5,300 to about 5,500. On the downside, immediate support is at 5,050. So risk to reward is also favoring the stock for going long at current levels. So with the stop just below 5,050, one can look at fresh long additions for a target of 5,300, 5,500, and definitely if I plot major technical indicators, that is the RSI and MACD, both are suggesting bullishness in this downturn.
Okay, surely keeping an eye on ALYM there, on the levels there. But let's move on, talk about SHIL Industries. Jinay, this one is in focus again. Why is that so?
Well, yes, so the company is focused on the back of brokerage note by Equarius. They have initiated a long trade with the target price of rupees 2,489. Now, what they say is that capacity addition and industry tailwind is what will drive the earnings going forward. Also, if you look at the laminate exports, that will remain a key focus area for growth for the company. And talking more on that, they said that the domestic laminate growth will be continuing for the company as it scales up across pan-India presence. Now they're expecting the acrylic segment to see a healthy growth even on a lower base. And if you talk about the balance sheet side, the company enjoys a debt-free balance sheet and also has a good return ratio is what Equarius believes. And if you look at stocks, the stock is buzzing up around 4%.
All right, that's about SHIL Industries, but let's move on and let's talk about Deepak Nitrite. Indeed, Aditya, all this fertilizer and agrochemicals, this space is surely buzzing, and Deepak Fertilizers is one such stock that you have picked up. Tell us, how is the technical setup for this counter?
So actually last week we did see a sharp up move in the stock last week and then the week prior to that. It's entered into a narrow consolidation now after that sharp up move, more of a sideways consolidation, I would say. So consolidation before the next leg of rally in the stock. On the upside, 2750, 2740 is the immediate resistance. Once a stock breaks out of that consolidation resistance, which is 2740, 50, I think stock can easily test levels of 3,000, 3,100 on the upside. On the downside, immediate support is at 2650 to about 2600. So given the stop loss just around 2650, 2600, one can actually preempt a breakout and go fresh long additions at current levels. For a target of 3,000, 3,100 definitely on the stock. And then all the technical indicators, MACD has shown a trigger above its trigger line, a crossover above its trigger line, and RSI is also trading in the bull zone. So overall, it's a very healthy looking chart setup.
Chart setup that we are watching out for in terms of Deepak Nitrite, 3,000, 3,100, around that mark also, where we could see is the word coming in from Aditya. Let's move on and talk about Dabur then. This one too is in focus on the back of its Q1 updates. Now when you're looking at it, what the management highlighted, rural recovery, that started seeing a pickup. The stock is trading at a 1 month high as well. When you look at it in an intraday move, it hit that 1 month high level, trading above the key DMA levels. Now overall, in terms of the growth, revenue growth registered is in the range of mid to high single digit growth. India business is expected to record a mid single digit volume growth. HPC healthcare segment is expected to grow in high single digits as well, and international business is expected to post a strong growth in the constant currency terms this time. Now other than that, what we are expecting also is that the management highlighted that overall sequential improvement was seen in terms of demand trend, especially from the rural growth front. Margins obviously seeing an expansion, gross margins as well as operating margins, but the pace of expansion for all these FMCG companies in terms of gross as well as the EBITDA margin would be lower than what we saw in the past, because now seems like the stabilization is coming in for the raw material costs. Other than that, what the brokerages are also highlighting is they said that overall Dabur numbers, Q1 numbers were in line. Morgan Stanley continues to maintain its equal weight rating. They said that the EBITDA was slightly ahead of the revenue and they expect margins to be broadly in line with what they were expecting. So yes, overall Dabur also in focus on the back of its Q1 updates.
All right, but Dabur is on Aditya's radars as well. And Aditya, talk to us about how is the technical setup looking like for this counter?
It's mirroring what Vinny pointed out. A very strong looking chart setup. It's broken out from our resistance, trendline resistance, on extremely healthy volumes, higher than the average volumes in trade. Today it's already up 3.5% as we speak. I think stock is good to test levels of 660, 670 on the upside. Just 627, 630 at current levels. So I think there is another 5 to 6% easily that you can add from current levels. On the downside, 620 to about 615 is a good support area. Plus, again, both MACD and RSI have shown a breakout above its trigger lines. So it's a very strong looking chart setup. The entire FMCG pack is looking strong, but within that, I think Dabur is one of the strongest, and one should definitely, if you missed out on an opportunity to go long, I think this is still a good opportunity, good time to go long with a stop loss at 615 and look for a target of at least 660, 670 on the upside.
Okay, surely keeping an eye out on Dabur there, but just let's take a look at what the budget expectations are coming in. And now on an ET Now exclusive on the budget front, we learned from reliable sources that the housing sector is likely to get a substantial push in the upcoming budget. The outlay for the housing will be up substantially. Prakash is joining in with us to give us those exclusive details. Prakash, what is it that we are expecting from the housing front of you from the budget?
Yes, we are learning from our sources that the government is likely to make some big announcement for the housing sector in the upcoming budget. We are given to understand that the special focus would be provided to the affordable housing segment. In fact, the Ministry of Rural Development and the Ministry of Urban Development and Housing Affairs have sent their separate proposal to the Ministry of Finance. We are given to understand that the government is likely to make big allocation under rural and urban housing schemes. As you are aware, that the government has already made an announcement to launch a new housing scheme for urban poor and middle class in the interim budget, but it had not made any financial allocation under this scheme. Along with that, Housing Affairs Ministry and the Ministry of Finance were also working on the modalities which have now been completed. The sources are informing that the government is likely to make big allocation under this scheme, which could be in a range of 50 to 60,000 crore. Since this scheme is meant for urban poor and middle class, therefore, there is a proposal to provide a benefit of interest subvention to the beneficiaries, which could be in a range of 3 to 6%. Sources are also informing that the government is planning to provide financial allocation for construction of additional 3 crore houses across the country. Moving ahead, the sources are also informing that the government is likely to increase the overall financial allocation under PM Awas Yojana Rural by 15 to 20%, which is around 80,000 crore at this point of time. Since various state governments have submitted their separate proposal, and therefore the government is likely to increase the overall allocation under PM Awas Yojana Rural as well.
All right, Prakash, thank you so much for getting at that budget exclusive. So all eyes on the housing finance sector. But with this, viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere. We'll be right back.
Welcome back. You're watching Market Fatafat on ET. Now it's earnings season. You can see those numbers flashing at the bottom of your screen. I'm going to mark that stock. You have SHIL, which reported its Q1 FY25 numbers. Let's just take a quick look at that, because it seems like the margins have seen a contraction from somewhere around 18%. It's come in at 16%. Profits of the company have seen a bit of a decline, though EBITDA in the absolute terms has seen an increase of 4%. But clearly, the stock saw a sharp fall coming in once the number was announced. Contraction in terms of margins is what we're keeping an eye out on right now. Let me look at the revenue front as well and where the revenue is moving as well. Just give me a second while I open it up. So revenues, yes, coming in and seeing a growth of 18.4%. So a revenue up 18.4%. Margins, so operationally, I think that's where the miss is coming in, because you're seeing the margins have contracted, as well as the profits of the company that's seen a decline as well by 20% on a year-on-year basis. So surely keeping an eye out on SHIL, as of now trading near the day's lowest point after it reported its numbers, down 4.7%. Trade. Shrishti, anything more that we should be watching out from SHIL?
Yes, actually, Vinny, that's the operational numbers that are looking weak for SHIL, and especially the operating expenses that has also gone up. And apart from that, what we can see is that the employee benefit expense, there has been a substantial jump on this particular number as well, where the company reported 278 crores in terms of, I beg your pardon, 28 crores around that number as the operational expense, which was around 24 crores in the same quarter last year. So clearly what we can see is that on the back of the miss on the operational expense, we are seeing that the stock is also nosediving. The margins were actually quite weak, and even the profit figure is not that great, and it's a 6% cut that is coming in on SHIL right now.
Absolutely, so surely keeping an eye out on Shalby on the back of its numbers, one of the first few companies that started reporting its numbers. Let's move on and talk about Reliance, Aditya. On Friday, surely saw a sharp up move coming in, but today, not much of an excitement, right? It's one of those decliners in Nifty 50, which actually is dragging the market. So what's the chart indicating for Reliance?
Very strong, very. Rather, as we speak, I think stock is trading in the green at the moment. And it was a good breakout in trade on Friday, and then it's continuing that up move. If anything, I think Reliance could be the major contributors in the Nifty in the coming next 1 month to about a quarter. I think it's one of the strongest looking charts that I've been in the entire Reliance Nifty 50 stocks list. Reliance is one of the strongest one, and I think it's still time. If you have missed out on an opportunity to go long on Reliance, you can still look at Reliance for going long. More of a positional trade here, looking at a target of at least 3,400 or 3,500 on the upside. On the downside, 3,100 is a very strong support area. And on Friday, we saw decent volumes also in Reliance in that breakout from that consolidation zone. So I think overall it's a very strong looking chart setup. Until the time Reliance is holding ground, definitely we know that Nifty is also not going to see that sharp correction on the downside. So I think Reliance is one stock which one should definitely eye and look for a target of at least 35 to 3,600 on the upside.
That's the take coming in on Big Boy Reliance. But moving on, one of the top losers today, Jinay, is indeed Titan. Tell us, how was the update coming in from the company, as well as what are the brokerages saying?
Well, so the company reported a Q1 operational updates, and we have brokerages from Morgan Stanley and JP Morgan. First, Morgan Stanley have maintained their equal weighted rating with a target price of rupees 3,526. What they believe is that top line was a clear miss, and this growth, which was below estimate, was mainly led by 8% growth in the Indian jewelry business versus expectations of growth of more than 20%. Now, given this backdrop in Q1, jewelry margins will likely to be disappointing going forward, is what Morgan Stanley believes. Also, if we talk about JP Morgan have downgraded the stock to neutral, and actually have cutted the target price from rupees 3,850 to the target price of rupees 3,450. What they believe is that revenue was a clear miss. Now, though the market share led gain narrative stays intact, but the downgrade was mainly because of the amidst emerging new risks.
Alright, that's the take coming in on Titan. But moving on, let's shift focus to KPI Green Energy. This stock is surely buzzing in trade today, and that's on the back of the news flow as the stock arrived after the hybrid power project deal that has been announced by the company. What you can see is that the stock is holding on to the gains of almost 3.5%. The news flow says that the solar and hybrid power generation, they have signed a purchase agreement for a 50 megawatt solar wind hybrid power project with Gujarat Urja Vikas Nigam. And on the back of this news flow, the stock has actually snapped its 2-day losing streak and is trading and holding on to the gains of almost 3.5% in trade right now. So that's the news flow coming in on KPI Green Energy.
Okay, that's KPI Green Energy that we're keeping an eye out on. Let's move on and talk about the next stock. It's stock number 12, Janai. You picked out Tata Motors for us. Today, surely was buzzing away in trade, but given up those morning highs that we saw, what's the word on Tata Motors? What is the update that we're watching out for?
Well, as the company reported in its Q1 updates, if we talk about the wholesale numbers for Q1 FY 2025, that saw an improvement of about 5% year-on-year basis, and the retail sales stood at 11,180 units, which was an improvement of about 9% year-on-year basis. Now, the mix of Range Rover and Range Rover Sports and Defender has increased to a total of about 68% of total wholesale volumes, and retail volumes are about 59%. Now, the wait list for new Range Rover Electric continues to grow with about 39,000 sign-ups, is what company says. Also, if we talk about the retail sales in this quarter, which it was up about 43% in North America, 14% in United Kingdom, and 4% in Europe year-on-year basis. And if you look at the stock is right now trading with a gain of about 0.5%.
Okay, let's move on to the next stock, and Aditya picked out Motherson Sumi for us. On the charts, what's Motherson Sumi looking like? And at current levels, would you say Motherson Sumi is a buy that would come in at around for the company?
Unfortunately, no, Vinny. I've got a slightly negative view on the stock. A couple of reasons for that. Predominantly, after the sharp up move that we've seen in the stock, now it's trading at extremely overbought levels. First, second, if I plot an RSI, it has started forming negative divergences. What do I mean by that? The prices are making higher highs while RSI is making lower high. So when that happens, it is a sign that the upward momentum is slightly losing its steam, and maybe there could be a correction in the stock. And plus, if we take a look at the way the stock is correcting today, I think it's time to book out profits if you are sitting on decent profits. And if you're looking to go short, maybe below 200, you can look to go short on the stock for a target of at least 185 to about 180 on the downside. And I think there could be some bit of profit taking in the stock before it resumes its uptrend. I'm not saying that major correction will follow through in the stock, but at least 20-25 points correction in the stock is very much possible.
Okay, let's move on to the next one, and then we'll talk about power utilities and all the stocks that are in focus on the back of that. So whether you look at Kalpataru, JSW Energy, NHPC, Inox Winds is what I'm going to be focusing on. Now, we have a note that came in from Investec, where they're initiating coverage on these power utilities. So NHPC, they've initiated coverage, buy rating, target price of 124. Inox Winds, buy rating, target price of 176. Kalpataru Projects, when you look at it, a buy rating as well over there with the target price of 1,473 rupees, and KEC International also is buy, and 1,002 is the target price for that. On the other hand, JSW Energy, they've given a hold rating there and a target price of 687 rupees per share. What they say that the power demand is to remain strong from FY24 to FY32, and owners back on the thermal to meet the rising demand. So yes, they believe that there could be a lot of traction that would coming in for these power utility companies. Wind transmission space could witness a fresh capex cycle, and obviously despite these developments, the country could witness a peak deficit that we are watching out for. So, surely these power financiers is something that they are keeping an eye out on. JSW Energy managing to hold on to some bit of a gain. Inox Wind, NHPC also is something that we're keeping an eye out on.
All right, that's about the power-related companies. But Aditya, one more consumer-related stock on your list is Godrej Consumers, and what a move in today's trading session. But do you believe that it still goes for a buy, and what are the targets that you're looking out for?
Definitely, Srishti, worthy of a buy. Another very strong-looking chart setup within the FMCG space, and it's just broken out from a pennant pattern. And how on very good volumes. So it is suggesting that the up move which is started in trade today is just up 3.5%. I think it can easily test levels of 1550, 1600 on the upside, and on the downside immediate support is at 1400. So you just have about 20-25 rupee to lose, and on the upside you can easily get about 150 or 200 rupee on the upside. And plus the entire technical setup, if I plot RSI and MACD, both are suggesting a strong bullish case for the stock going through. So I think both Bajaj Consumer and the one we discussed earlier qualifies for a very strong buy list.
That's the take coming in on Godrej Consumers. So moving on, let's have a look at HPL Electric, because this counter is also on the roll. More than 6% gain coming in today's trading session. What the company has announced today is that they have signed an MOU with a Chinese company named Guangxi Runway Technologies, and this MOU is for the local manufacturing under the phased manufacturing technical tie-up procurement for the assembly of relay and latching relays in India. And on the back of this particular MOU that's been signed by a Chinese company, the stock is in focus and indeed holding on to the gains of almost 8% right now. But with this, viewers, in this edition of Market Fatafat, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back with more buzzers right after this break.
If you like this video, then like, share and subscribe to ET Now.